Well, good morning, good afternoon, good evening, wherever you may be in the world today. Good morning, ladies and gentlemen. Good afternoon. I'm Tia Rogers. To take care of your health, save, invest, and grow your money business mentor. And I'm coming to you this today because we're practicing, right? We were talking about practicing when you're starting something new, becoming better at your skills. And becoming more aware of what our higher values are. I also gave gave you guys a couple of assignments to do, and I hope that you are. I want to know how you guys are making out with them. Um, we went over uh, goals, right? We wanted smart goals. We want to set smart goals. And hold on, let me see if I can pull this down like this. Yeah, that works. Okay, can you guys see that there? I hope so. We're talking about smart goals. So with our smart goals, we were saying it has to be specific, it has to be measurable, achievable, relevant, and time bound. Something that you can put into place that is going to last you long term. Um, the benefits of good time management. We reviewed that and how it helps you achieve your goals faster. It helps you prioritize your work. It gets more done in less time. It reduces stress. It prevents procrastination. It boosts your confidence, offers improved career opportunities. Define and prioritize your tasks. Break down tasks into smaller tasks is what we're talking about when we're talking about setting smart goals, getting more on top of our life business. Being able to identify what our values are, what is the highest values that we're working from, because what we value, we prioritize. What is as you're looking at your values and you're looking at your life as a whole, you know, with values, you work and operate from your morals and ethics of what you see your and perceive your life to be, right? Okay, hold on right here. Uh, I want to go over again with the financial literacy challenge questions, just in case someone has missed it or didn't get a chance to really like get the full gist of the questions. So what I'm going to do is I'm going to take a moment. Uh-oh. What did I do? I cut the camera off. Hold on. Didn't mean to do that. Okay. Yeah, I hit something when, when I pushed the screen. I'm so sorry. So with the financial literacy questions, I'm going to ask you seven. I want you to take out a piece of paper. I want you to write these 17 questions down. I want you to mark from 1 to 17. I want you to make a column for yes or no. And I'm going to read through the questions, and I want you to look and see where you are. And this is going to help you. So let's start with the questions first, because I have some information for you today and I don't want to overwhelm you, but I just want to help keep you on track and uh, keep you aware that there is help for you should you need it in whatever area, because life happens on life terms. You know, we're all grown men and women here, and we have lived life, and we have, you know, done well and not so well when it comes to our finances. So we need to see where we are with that. So the first question is, do you know your current credit score? The second question is your score 750 or above, so that you can save the most money and have the most control over your financial position? Question number 3, do you currently utilize credit related tools that enable you to monitor your credit reports and credit score, build positive credit habits, and remove derogatory items from your credit report? Do you have all of the following in place: the last will and living trust, health care, and financial power of attorney? Do you have all of your personal and financial documents and information organized in a place where the appropriate people could easily find it if something were to happen to you? Question number 6. Do you have a savings account that is gaining interest? Number 7, if you have children, have you started a high yield savings account for them? Question number 8, do you have 6 months of lifestyle bills in an account? Number 9, are you aware that every 3 seconds someone's identity is stolen? Number 10, have you started a retirement plan or know your retirement number needed for a comfortable life? Do you have some type of identity theft protection system currently in place? That's question number 11. Question number 12 is, do you feel like you are on track to be debt-free at this point in your life? Question 13, do you currently have a budget and debt payoff tool or system that helps you pay off your debt efficiently and enables you to know the exact time frame that you will be debt-free? Do you have, question 14 is, do you have 100,000 or more in life insurance? Question 15 is, do you feel that your formal education or your upbringing sufficiently prepared you to appropriately manage your finances and important personal matters as it relates to protecting your identity, credit, assets, real estate, personal property, and family? Question number 16, do you feel today's educational system is preparing our teens to understand credit, banking, home ownership, and other personal and financial matters that will affect their future? Question number 17, if you know of any affordable way to get of the education and services you need to protect yourself and your family, would you be interested in knowing how to take advantage of it and be open to talking to someone about it, as well as contributing towards financial literacy for youth across the country? So if you answered 13 or more of the questions, yes, then congratulations to you, because you're financially literate and likely responsible for protecting yourself and your family, and probably enjoy peace of mind knowing you have everything in order. Now, if you answered less than 13 times, you are likely leaving your family unprotected, likely not handling your financial matters as you probably should, and you likely don't have the peace of mind you probably want. Therefore, the biggest question is for you, are you willing to do something about it? So I just wanted to go back over those questions again for you. I have some, if you are in the second category where you answered less than 13 questions, if you got less than 13 yes, please feel free to reach out to me. Go to our Real Family Dynamics Facebook page, where there's plenty of information and tips to help you kind of get back on track. And take a look. We have some overviews there for you as well, for you to give you more information, because it's more than just getting your credit scores together. We want you to be financially equipped to build the life that you want to live. Okay, so feel free to get back to me with any questions, fill out the customer form. But right now, I want to take you guys on a little journey with me. As you know, I I had my own financial issues, and based off of what I was looking for, because once I find out, I told you guys, I found out that I'm thinking that, yay, I'm a homeowner. I was glad to be a homeowner and blessings in becoming a homeowner. But when I found out that, the home is not an asset, it's really like a liability. It only becomes an asset once I am able to obtain some other type of, how can I say this? Because I'm still learning this. Um, Either another property that actually I can rent out or sell again, to flip the property, or rent it out. And I told you guys, I shared with you, my long-term goal dream is to eventually be able to provide and obtain housing to help transitional parents that sometimes fall on hard times. Being a homeless parent myself of two children, I know how hard it is when you have to live from pillar to post with your children, and or if you have to go to a shelter. So the best thing that I learned in that process is that the moments that I had time to myself was the times that I could really use that time to think and map out what the steps I wanted to take to get there. But as always, credit is always an issue, right? So credit is always something, either you have it or you don't have enough of it to qualify for anything. And even if your credit is good, there may be other factors that keep you from, being able to do what it is that you want to do when it comes to finances, obtaining loans, things of that nature. So on my journey, I came across a gentleman, Alvin Howard, and he's a part of real estate investing. And we got to talking. We got to talking about the property, because with everything going on, a lot of people were like suggesting that, I need to move. So, and I'm not quite ready for that yet, because I love my home here. I bought my home for a reason. But God's going to map out the steps as we're going. But along those journeys that we take to along those journeys of exploration, I wanted to learn more about how I can become better to actually build my credit score, as well as build my finances and learn how to better pay bills and get things off. So Alvin introduced me to Bill, and through Bill and Alvin, I was blessed to meet Miss Nancy Rowe and her husband Scott Rowe, and they're part of the Rowe team, and they're teaching us all about, real estate, how to, like, we're a part of property tours and things of that nature, things to look for when you are looking at a property, what makes the property a good investment. Because someday you want to be a homeowner. I believe I commented underneath a friend's post yesterday where she had posted that now today, in order to acquire a rental property, you need at least 3 times the rent starting out. So it's becoming more and more pertinent that we educate our children, educate ourselves, but educate our children on financial literacy, because we want to put them in the best position ever, best position that they can be, moving forward. So after meeting Mr. Scott Rowe and Miss Nancy Rowe and Alvin and Bill, and sitting in on some investors community meetings and webinars, the information was profound. The most profound one for me currently is the one on velocity banking, because right now we're in a stage of building a business, coming out of debt, trying to create business credit and put ourselves in a better situation so that we can become an even more sustainable business. God has blessed us to be here where we are right now, and we've had a long journey, but we have a longer way to go. And we're not worried about how long it's going to take us to get to where we're going. We're more concerned about getting the education out there, helping other people understand their finances and different ways that they can benefit from the financial education. So if you are an experienced real estate investor that wants to collaborate, or a newbie that wants to learn more, I'm going to share this presentation with you, and afterwards, feel free to contact me. I would gladly link you to my newfound friends and partners, because this is all about relationship building. The more people that you can come in contact with and share and exchange information, the more people and more families we can help and benefit. So without any further ado, let me go here so I can share the screen, and I'm going to introduce you to Mr. Will Montes, who's going to explain to you a little about velocity banking. So grab your notebooks, ladies and gentlemen.
Interesting.
Is it not going? All right. Let me see. Okay. Hold on. Let me see what's going on here. Not sure. I know that it's a whole lot easier when maybe I needed to refresh it.
Welcome, everyone. My name is Will Montes, and my job is to give you a good taste of velocity banking. What is velocity banking? The speed of banking, how to pay down debt in less time and save yourself thousands and thousands of dollars. Otherwise, you will be putting that money into the banker's pockets as interest, okay? And when I say save yourself thousands and thousands of dollars, I'm talking with your current income without getting a second job or sending double payments to the bank. How's that possible? Well, velocity banking is part of our curriculum, and our curriculum entails over 400 hours of knowledge to acquire, okay? And our courses are broken down in 8-hour powerful courses. One of those many powerful courses is velocity banking. So in our essentials package, which is our basic package, okay, we have an 8-hour course which shows you how to use the strategy of velocity banking. And in our advanced courses, which we refer to as our AITs, we have another 8-hour course of advanced velocity banking, which shows you how to use the strategy with multiple real estate investment strategies and save yourself thousands and thousands of dollars. Otherwise, just like I stated, you will be putting that money into the banker's pockets as interest, okay? Now, some of you as guests, you are in a live meeting with Scott Rowe or in a live webinar with Scott Rowe, okay? Scott and Nancy, his wife, Rowe, R-O-W-E, their last name, okay, they head up our organization, okay? And if you were in a webinar with Scott Rowe or in a live meeting, he spoke a little bit about his background. I myself go back with Scott Rowe 28 years, okay? So as a former W-2 employee, Scott Rowe, okay, he was vice president of sales and marketing, earning $212,000 annually, overseeing multiple offices nationwide. My office was one of those many offices, okay? I'm originally from Chicago. I had the opportunity to start with that company in Chicago, travel out to the East Coast, New York, Atlanta, South Beach, Florida. Life was good in Miami back in 2008, but due to the evolution of the internet, our business was on the decline and finally came to a close in 2007, okay? Now, I like to use Scott Rowe so that you can get a good taste of velocity banking, because he was earning, as a former W-2 employee, $212,000 annually. I was making very good money. His wife, Nancy, was also making very good money, but we were nowhere close to $212,000, okay? Now, once Scott and Nancy each got laid off from their jobs, they saw a sign on the side of the road from their own vehicles. And here's what the sign stated. Real estate investor looking for an apprentice, make thousands per month. And there was a specific amount of money on the sign. And Scott labeled the sign a scam. He said, that sign sounds too good to be true. And here's what Nancy said. I don't know if it's true or not, but I'm going to call the number because we're in dire straits financially. So she made a phone call. The guy invited her down to a meeting, the same meeting as some of you as guests witnessed with Scott Rowe. Now, Nancy did not come to this office where I'm currently broadcasting on the outskirts of the city of Chicago and Downers Grove because it did not exist for our business. She was invited down to a hotel. And if you've ever been to a real estate seminar at a hotel, you know that the gurus put on a fantastic show. And at the end of the presentation, they guide a herd of individuals to the back of the room and they want them to swipe their credit card to sign up for a 3-day boot camp on an impulse reaction. Scott had witnessed one of these seminars before and he was reluctant for Nancy to go down, but she went down anyway. And she came home very excited. Scott questioned her when she got back home. Tell me you did not buy anything on an impulse reaction. She responded, no, I did not. But you're going to come down with me the following week to view this meeting, okay? So she didn't pick up anything, okay? And Scott did not want to go the following week, no, okay? Then Nancy proposed a question to her husband, Scott, okay? And here's the question that her husband, Scott, was proposed for question, okay? Now, tell me, okay, you didn't buy anything on impulse reaction, but, okay, here's what she said to him, okay? You don't believe I'm intelligent enough to make an informed decision. So he questioned her, okay? When she said that, she dragged him down to the meeting the following week, okay? Now, he went with the intent of debunking the scam, and it didn't work. At the viewing the meeting, he met a firefighter and a nurse, making less as a firefighter and a nurse, okay, than he was as former vice president of sales and marketing for his former company, okay, making $212,000. But they each had a portfolio, okay, and they were making lots of money because they had a lot of transactions in real estate for long-term retirement. Scott, he didn't have such a portfolio under his wings, so immediately after viewing that meeting, Scott and Nancy signed up as students, okay? And that was back in 2007. A month later, this office was opened up, okay, in 2007 in Downers Grove, okay? Now, what happened in 2008? There was the financial market crash. Did it affect some of us on tonight's webinar? Absolutely it did. Did it affect millions of people throughout the United States of America? Yes, it did. Well, let's fast forward to August of 2023, or July, should I say, I'm getting ahead of myself, of 2023, and let's find out how the markets affected Scott and Nancy, their business, okay? Fast forwarding to today, Scott and Nancy now have an organization close to 25,000 individuals as students under their wings, okay? Scott and Nancy have duplicated this one office to 29 offices nationwide. Is that a lot of growth? Absolutely it is, okay? Now, regardless of the markets, whatever they're doing, okay? Now, for the last 7 years, between 2013 to 2020, prior to COVID, Scott and I, we were committed on helping out 2 offices at a time on a weekly basis for a period of 6 months, traveling all over the United States, helping out offices, okay? We're no longer traveling due to the COVID situation, and that's why we got the Zoom webinars now, okay? But I'm gonna paint a picture on what we were doing. The last 2 offices that we were able to help out, that was from July 2019 all the way to January 1st, 2020, okay? Now, every Tuesday morning for 6 months on a weekly basis, Scott and I, we would travel in the morning on Tuesday from Chicago to Austin, Texas. In the evening, help out that office. Wednesday morning, get back on a flight to Sacramento, California, help out that office in the evening. Thursday morning, come back to Chicago and help out this office in Downers Grove like we've been doing ever since 2007 on a weekly basis. Is that commitment? Absolutely it is. And here's the reason why. Somebody was able to help us out. And if we can pay it forward by helping out just one individual from all of our guests to enroll in our curriculum this evening, we did our job. I would love to include all the guests, but unfortunately, based on statistics, the odds are stacked against you. Only 1 to 5% of you will sign up, okay? And here's the reason why 95% of you will not sign up, okay? You don't believe in opportunity, okay? You have the same mindset that Scott had back in 2007, the mindset of a W-2 employee. This sounds too good to be true mentality. That sounds like a scam mentality in the #1 country on our planet that people are flocking for opportunity. Just notice, okay? Now, just like Kelly said, my job is to give you a good taste of the velocity banking. Participation is the key. Once I take my picture off the screen, I'm going to bring up the whiteboard and I'm going to illustrate an example so that you can get a good taste of velocity banking. I'm going to be asking questions. I'm going to be saying for people at home in the chat box, please give me your responses of what you believe the answer is. Or I'm going to be saying, press the raise your hand button if you agree with this, press the raise your hand button if you agree with that. For people in the room, the guests especially, okay, if you know the answer, right, you suspect the answer, nice and loud so that everybody around the nation can hear you, okay, or around the world can hear you, right? We got Indonesia, okay? Or raise your hand if you agree with this, raise your hand if you agree with that. Now, shortly after I got laid off back in 2007, I went into the mortgage industry and I loved it. It was a very simple way to make lots of money. But I quickly found out how much corruption there was in the mortgage industry, okay? And I could not be a part of that industry any longer. I even attempted to be a whistleblower because I witnessed a lot of fraud and nobody was listening to me, okay? Now, in 2008, once the markets crashed, did we find out how much corruption there was in the mortgage industry? Yes, we did. Do you still believe that there's corruption in the industry? Well, the banks are starting to be bailed out by the government once again, just notice. But I'm no longer part of that industry. I'm not a banker. I'm not a financial guru. And I'm definitely not a financial advisor. So please do not ask me questions about your own personal financial situation. I will not answer such questions as those. Here's the way I like to identify it. I'm just a student, and I come down to Real Estate Church week in and week out. And if I can help out just one individual from all of our guests to enroll in our curriculum, I did my job, okay? Now, I'm gonna take my picture off the screen. I'm gonna bring up the whiteboard. I'm gonna walk you through on everything I'm gonna be doing, okay? So I'm gonna stop the video. Share my screen, share the whiteboard, enlarge this, move some things around for everyone. Okay, beautiful. Let me close this off. Okay, so we have 9 individuals online and we have 4 individuals with me on tonight's webinar. So we have a total of 13 individuals, okay? Now, here's my first question. If you're currently part of our curriculum, you're an active member within our community, please raise your hand. Going once, going twice, going 3 times, okay? So we have 4 Renatus members, okay? And 13 minus 4, you can lower your hands, thank you. And we got 9 guests among us, okay? Now, for people who have witnessed, this is my 4 Renatus members. Have you ever seen Velocity Banking at all? Okay. Okay, beautiful. Okay. So for Renatus members, if you haven't seen the Velocity Banking training, okay, feel free to answer questions with the guests. Okay. If you've seen it, let's give the guests an opportunity to answer questions first. And then if we got to help them out, then we can help them out. Okay. And for people at home on the chat box, for Renatus members, let's keep the chat box open so that the guests can answer questions. And like I said, let's give them the opportunity to answer questions first. Okay. Now, if you were on a webinar or in a live meeting with Scott Rowe, he spoke about the 4 currencies. On the upper left-hand corner, I'm going to write down the 4 currencies, and we are going to rehash all 4 currencies. Number 1, money. Number 2, time. Number 3, knowledge. And number 4, relationships. Okay? So we have all of this, relationships. Now, starting with relationships and working our way up, and you already know this. If you hang around with 4 broke people, who's the 5th? You are, right? You hang around with 4 wealthy people, you're the 5th. Now, a community of like-minded individuals, close to 25,000 individuals collaborating on a weekly basis, all acquiring knowledge the same exact way, learning systems to understand finances, not only finances, but real estate investing as well. Is that powerful? Absolutely. That's a strong force, okay? Now, here's my first question for all of my guests. Between the currency of money, currency number 1, or the currency of time, currency number 2, okay, which one do you believe is more important to you? Please give me your responses in the chat box or in person, okay? So Cody says number 2, time. Cody, Crystal, Taufik, okay, Jada, you're all correct. Time. Now, what makes time more important than money? Simple response, everyone. It's not a renewable commodity, okay? So every second, every minute, every hour, up to every year that you contribute into the bank of time, can you withdraw that time? Absolutely not. I would love to be 21 years old once again in my lifetime. but because time is not renewable, it's more valuable and it cannot happen, okay? Okay, so time is more valuable, but for 95% of the population that you represent on tonight's webinar, okay, as W-2 employees, these individuals, we've been trained as adults to trade 40 hours a week for the next 40 years and hopefully be able to retire at the age of 65. How is this plan working out for all of you? Okay, but everyone, what I really want you to understand and really notice, for the remaining 5%ers, and I'm talking about business owners or the wealthy, okay, these individuals have a different plan in place. They have a business, a specialized business like real estate investing, for example, that makes money in their sleep so that they can have the freedom to do whatever they desire to do whenever they desire to do it. And the one thing about these 5%ers, here's the very interesting thing. They control the 95% of W-2 employees. So in this scenario, less is definitely worth a lot more, okay? Now that we established that we're all nationwide, I'm going to start using like-minded numbers that we all can relate to as of July 2023, okay? Here's the first number I'm going to put up there, $60,000. $60,000 net. Why $60,000 net? Because it represents the average household income currently in America. So if I got Allison making 80,000 on an annual basis, and Jada is making 40,000, combined is 120. Divided by 2, on average, is 60,000. That's what I'm referring to, okay? Now, we don't live on a year-to-year basis. We all been trained to live on a month-to-month basis. So if we take that 60,000 divided by 12 months, that equates to $5,000 every month. So in this example, everyone, we are now each making $5,000 on a monthly basis, okay? Now, we've been all trained to go to a place of employment, and at the end of the pay period, whether it be on a weekly basis, a bi-weekly basis, or a monthly basis, our employers, they reward us for the time that we have exchanged, okay? On payday, they give us this piece of paper shaped like a rectangular shape, okay? Who can tell me in the room, what am I speaking about? What is that piece of paper shaped like a rectangular shape that you receive from your employer on payday? A paycheck. Beautiful. A paycheck, okay? Now, everyone, please raise your hand if you agree with my next statement. We take this piece of paper called a paycheck and we go down to an institution called a bank, and we make a deposit into a checking and a savings account. If you're familiar with this, please raise your hand. Beautiful. Love the hands going up. Now, everyone, here's what I really want you to understand, okay? You never met me, and I never met you, and you've never met each other online. Strangers doing common things as W-2 employees. That's what I want you to start paying attention to, the common traits of a W-2 employee. Now, who are the first individuals in your life to train you on this system? Mom and dad. And what did mom and dad state about saving your money, okay? If you have ever heard of this metaphor, please raise your hand. If you have ever heard of saving your money for a rainy day, if you have ever heard of that, please raise your hand. Beautiful. Love the hands going up, okay? Now, everyone, here's a cloud and here's some rain. Now, here's my next question for all of my guests. What does the weather have to do with your money in the bank? Absolutely nothing at all. Now, did you question your parents or what they were training you on? Most W-2 employees never question anything when it comes to their finances, okay? They just follow along, okay? Now, what did our parents actually mean? Here's what they meant. Save your money in case of an emergency. This is what they meant, but just notice how they trained us indirectly. And that means you have an indirect relationship when it comes to your finances, and that has you bleeding money. And when I'm talking about bleeding money, okay, I'm talking in the thousands of dollars. And most W-2 employees don't even realize that they're bleeding money, okay? Now, here's my next question. Do you believe that Donald Trump trained his kids about finances using the weather as a metaphor? You know the answer, absolutely not. So from this point forward, we need to start being direct and create a brand new relationship when it comes to our finances, okay? Now that we established that, once the money lands into the checking and savings account, what's the next thing that we do? Oh, we pay bills. So I'm going to create some real life expenses that we all can relate to, because we're all nationwide or universally wide on tonight's webinar. Okay, so over on the right, I'm going to put down the loans. Okay, we're each making $5,000 on a monthly basis. So everyone, you're going to get a house today. Your house is going to be worth $200,000. Why $200,000? Because it represents the average cost of a single family home currently in America. Now, if there's anybody online who's residing in the state of California, the average cost of a single family home has surpassed $800,000. Just notice. Now, this is going to be a 30-year fixed mortgage. We got to come up with $600 on the first of every month, and the bank is financing our beautiful property, not at 21%. Take that back. I'm sorry. At 6% interest right here. Okay. So the money lands into the pie, and now we start dividing up the pie based on our monthly budget. So we're going to set aside $1,200 on the first of every month for the next 30 years. Okay. Now, by a show of hands, please raise your hand if there's a vehicle in your household. If there's a vehicle in your household, please raise your hand. Love the hands going up. So everyone, you're going to get a car today. Your vehicle is going to be worth $25,000. This is going to be a 5-year loan. We got to come up with $600 on the first of every month. And the bank is financing our beautiful vehicle also at 6% interest, right? So we're dividing up the pie even more. For the vehicle, we're going to set aside $600 on the first of every month for the next 5 years. Okay, what's next on the list? Well, over on the right, we got the loan. So on the left, look, let's put the lines of credit. And what do I mean about a line of credit? I'm talking about Visa, MasterCard, American Express, Discover. These are credit cards, types of credit lines, okay? So everyone, we're each making $5,000 on a monthly basis. We are now going to pick up an application and fill it out and send it in to the Visa company, okay? The Visa, we're going to give them permission to take a look at our credit report. They realize that we're each making $5,000 on a monthly basis, so we all have been pre-approved for a Visa line of credit. How much did we get approved for? Okay, how about $15,000 is going to be the limit on that line. Let's create a balance on there. How about $12,000? Sounds a little bit too high for some folks, okay? But the same two individuals, mom and dad, that trained you how to save your money for a rainy day, also demonstrated to all of you how to put yourselves in debt during the holiday season. We witness our parents going shopping for all their friends, all their loved ones, including you. And they're buying all these gifts, okay? And at the end of the transaction, they're not paying cash for it. They're swiping that card. At the end of the month, they get that statement for $12,000. They don't have $12,000 in the bank. So guess what? Now they're only budgeting, this example, for the minimum payment due of $600. And the Visa company is financing that beautiful credit card at 21% interest. So right here, we got the line of credit, and we're budgeting an extra $600 on the first of every month, okay? What's next on the list? Well, we got the line of credit, the vehicle, the car. How about the living expenses? Oh, yeah. What do I mean by living expenses? Everyone on tonight's webinar owns a cell phone, cable, clothing, food, utilities, kids for some of us, grandchildren for others, okay? So let's set aside $1,200 for the living expenses, okay? Now, our parents taught us to save our money for a rainy day. That's short term, okay? In case of an emergency. But how about for long-term retirement? Oh yeah, they talked about long and short-term savings. So let's find out how well we all listen to our parents when it comes to our long and short-term savings accounts, okay? So everyone, we're gonna take another poll. Participation is the key, okay? If you currently have a 401k with your employer as of July 2023, please raise your hand. Going once, going twice, going 3 times. So we have 4 individuals that raised their hand. 4 out of 13 individuals. That's not much, okay? Now, if you have stocks, mutual funds, CDs, bonds, any types of these retirement accounts, please raise your hand. Going once, going twice, going 3 times. So we got 2 out of 13 individuals. Percentages just dropped, okay? Now, our parents taught us to save our money in case of an emergency, okay? If you were to get laid off today and lose your job, this is what they were referring to. So Please raise your hand if you have a minimum of $7,000 currently saved in your savings account so that you can sustain yourself throughout a layoff. Going once, going twice, going 3 times. So 2 out of 13 individuals. Well, what does that state to us? We didn't listen very well to our parents. We are horrible savers. And I can say with conviction, Americans are horrible savers, okay? Now, I can say that because I've been doing this meeting on a weekly basis for the last 10 years. And week in and week out, I get the same results. So although we're horrible savers, I'm going to put down in this example, like if we're all great savers and we're setting aside $1,400 on a monthly basis. So everyone, let's add up all the pieces within the pie. We got $1,200 for the house, $600 for the car. That's $1,800 total. Add $600 for the line of expense, $2,400. Add $1,200 for the living expenses, $3,600. Add $1,400 for the long and short-term savings. That's a total of $5,000. Okay, so everyone, we have a total of $5,000 on a monthly basis. Now, we're going to start looking at this example from a whole brand new set of lenses. Like if we're all knowledgeable, currency number 3. When it comes to our finances, currency number 1, like business owners or the wealthy. Now that we're looking at this example from a whole brand new set of lenses, we're not just looking at an example on the board. We are now looking at a business plan, a business model. In a business plan, the money that's coming in as income is referred to as input. The money going out as expenses is referred to as output. Now, here's my next question. If we're making $5,000 on a monthly basis, okay, and we're spending $5,000 on a monthly basis, who can tell me in the chat box or in person, how much positive cash flow do we have remaining at the end of the month? Somebody please give me that response. 0. Beautiful. 0 cash flow. And someone who is knowledgeable when it comes to their money, they look at this business plan and guess what? They do not want it for one reason alone. It represents the life of a W-2 employee. The more money they make, the more money they spend. They're living paycheck to paycheck. And you all have heard of these terms before, okay? Now, everyone, how about if we're making $10,000 on a monthly basis and we're spending $10,000 on a monthly basis? Same scenario, no cash flow remaining at the end of the month. Okay, so is this person actually swimming, treading water, or drowning currently? Okay, here's the correct answer. They're treading water, but they actually believe that they're swimming for one reason alone, because they have income coming in. They're not drowning for the same exact reason, because they have income coming in. But in reality, what's actually going on is that they're treading water because they got 0 cash flow remaining at the end of the month. So that you can all understand what I'm really talking about, okay? Let's turn back the clock to 2007, and let's use Scott Rowe, okay, as an example. Back in 2007, as a former W-2 employee, Scott was earning $212,000 annually. And that equates to $17,666 on a monthly basis. But Scott was spending $17,666 every month with 0 cash flow remaining at the end of the month. And then something happened. Scott, his wife Nancy, and myself, we all got laid off. What started to happen to Scott Rowe? From treading water, he now started to drown. Okay, everyone, how did Scott start to drown? Let's take a closer look at that. His condo downtown South Beach, Miami, gone. His condo downtown Chicago, also gone. His multiple luxury Italian foreign cars, all repoed, bye-bye. Now Scott and Nancy went from owning property to renting property on the outskirts of the city of Chicago. And it was the apartment complex that they would drive into on a daily basis from their own vehicles. They would see the sign on the side of the road. And here's what the sign stated once again. Real estate investor looking for an apprentice, make thousands per month. And Scott labeled the sign a scam. That sounds too good to be true. And Nancy decided to call the number. Thank God she picked up the phone and dialed the number. And here's the reason why. Not one of us would be on tonight's webinar if it wasn't for Nancy Rowe picking up the phone and dialing the number. Just notice, okay? Now, okay, everybody, okay, let's take another poll, okay? And this is for everyone on tonight's webinar. If you have ever owned or controlled real estate, please raise your hand. And I'm talking about a commercial property, a single family home, a multi-unit, a condo, or a townhouse. Please raise your hand. Going once, going twice, going 3 times. So we got one more also. Okay, so we got 7 individuals. Beautiful. So we got 7 individuals that are homeowners. So we got 7. Let me correct that right here. Make that better. We got 7 homeowners currently. Nope, take that back. 7 homeowners ever, should I say. Okay, now here's my next question for my 7 homeowners ever owned. If you still own or control real estate as of today, July 2023, please raise your hand. Going once, going twice, going 3 times, okay? Homeowners? Okay, beautiful, 4. So we got 7, so we didn't lose anybody. So we got 7 homeowners currently. Beautiful. Now, everyone, let's pull back the curtain a little bit further back, okay? Our parents taught us to save our money in case of an emergency for a rainy day. In order for rain to freeze on a rainy day, who can tell me online or in the room, okay, what's the required temperature outside needed to be for rain to freeze? Somebody please give me that response. 32, right? 32 degrees wet, Fahrenheit, okay? Fahrenheit, okay? If we're using Celsius, does anybody know the answer? 0, very good. Thanks everybody online as well, okay? So is it fair to state that 32 degrees Fahrenheit is equivalent to 0 degrees Celsius? Yes, both of these are equivalent to each other. Now everyone, how about if I do this? How about if I take that 0, scratch it out, and I increase the Celsius only by 1 degree? Which one's hotter now, 1 or 32? Somebody please give me that response. 1. That is the correct answer. But wait a minute. How can 1 be higher than 32? Here's the reason why, okay? Both Fahrenheit and Celsius are 2 different measurements, are 2 different units, are 2 different scales, okay? That's what makes them equivalent, right? And that's what makes them unequivalent, okay? Now, here's my next question for all of my guests only, okay? In this example, you're going to receive a house, and we're going to start role-playing, and you got to walk into my bank, Williams Savings and Loan, and I'm going to lend you $200,000 so that you can acquire your beautiful property. Now, for all of the guys, what would you rather pay back to me on the money that I'm lending to you? 6% interest or 21% interest? Please give me your responses in the chat box or in the room. Guest only. Cody says 6%. Okay, anybody else? Okay. Beautiful. So 6% it is, right? Jada, thank you very much. Tafiq, right? 6%. Beautiful. Now, why 6%? Because it's the lesser of both. That means more money saved in your pocket, less interest into the banker's pockets. I'm dealing with very intelligent individuals, okay? Now, everyone, okay? 6%, 21%. Did you also know, okay, that both Fahrenheit and Celsius are 2 different measurements, just like when it comes to loans and lines, okay? Both loans and lines are also 2 different measurements, 2 different units, and 2 different scales. So let's start defining how both loans and lines are 2 different measurements. We'll start with the loans first. The bank is going to charge us, or going to lend us $200,000, and they're going to charge us 6% simple interest. 6% simple interest, okay, is simple interest, but it fails to remain simple interest for one reason alone. The second that they add time to the equation, 30 years. The second that they add time, no longer does it remain simple interest. Now it converts to amortized debt, okay? And you all have heard of amortization or compound interest, okay? Now, under the lines, the bank is charging us 21% interest on that $12,000 balance, okay? 21% is simple interest, okay? And it remains simple interest for one reason alone. And here's the reason why, everyone. Under loans, you see time, 30 years added to the equation. Do you see time under the lines? Absolutely not. Because you don't see time under lines, it does not convert to amortized debt. It remains simple interest. Now, in order for the Visa to charge you interest at the end of the month, they don't amortize their interest, they aggregate it. What do I mean by that? When they take that 21%, which has an APR right behind it, okay, an annual percentage rate, and they divide it by 12 months, which is equivalent to 1.75%. Now they look on how you used their credit card in the previous month of June. They take the daily average balance, times it by that 1.75%, and that's how they bill you with interest at the end of the month. So the lines remain simple interest, but the loans convert to amortized debt. When I say the loans, I'm talking about the house loan, the car loan, the student loans, all the loans, okay? Now, if we were to graph both the loans and the lines over time, here's how they both would appear, okay? But I'm gonna ask one question before I do so, okay? Before I graph it, okay? Under loans, I'm expected to walk into the bank and hand the teller $1,200 on a monthly basis. I got this number wrong right here, so let me correct that. That is $1,200 on a monthly basis. The second that I pay that mortgage, okay, on my home, okay, the $1,200. Once that payment is processed, can I then reuse a penny of that $1,200 or a penny of the car payment of the $600 once that payment is processed to buy me a shirt and tie? Somebody please give me that response. Yes or no? No, absolutely correct, okay? So the second that we give the $1,200 to the teller to pay that house, okay, that money is gone forever. So the loans are one-dimensional. They only work in favor of your bank, okay? Your banker. Now, under lines, I'm expected to send a minimum payment of $600 to the Visa. The second that they process that payment, can I then reuse my Visa card to buy me a shirt and tie once that $600 payment is processed? Yes or no? Yes. Yes, right? I can reuse my Visa. So the Visa, the lines are two-dimensional. They work in favor of your bank, but we can also make them to work in favor of us. So we have a two-way street compared to a one-way avenue. Now, if we were to graph both the loans and the lines over time, here's how they both would appear. Now I'm going to graph both the loans and the lines, starting with the loans first. And I'm going to round off everything so that we can get through the webinar, okay? And I'm going to leave the interest towards the end of the webinar. Starting with the loans, I'm expected to walk into the bank and hand my teller $1,200 on the first of every month. And I start doing that as of July 2023. And I'm expected to do it until July 2053, which is equivalent to 30 years from today. Now, half the life of the loan, that would be July 2038, which represents 15 years from today. Now, in this example, let me get some water, everyone. Something happens as of July 2040, 17 years into the loan, and something happens as of July 2027, which represents 4 years into the loan. Now, the second that we hand that $1,200 to the teller and she processes the payment, something happens with that payment. A portion of that, $950, something happens with that, and the remaining portion, $250, something happens with that. Now, in the chat box, or for individuals in the room, what do you believe that $950 represents? Somebody please give me that response. The interest, right? Thank you, Darren. So the second that we process that payment of $1,200, $950 is going into the banker's pockets as interest for doing us the favor of lending us $200,000, okay? Now, if $950 represents the interest, that means $250 represents the principal paid on. So $250 is actually combating the $200,000 that the bank lent us to acquire our beautiful property. Now, if we were to graph both the interest and the principal over time, here's how they both would appear. For the first 15 years, the majority of the $1,200 payments is going towards the interest. The interest will decline, but not by much. And the principal will increase over the first 15 years, but not by much. And here's the reason why, everyone. Your banker does not care about you. Their only intent is to make money off of you by interest. And they want to do it in the front of the loan, not the rear. You may have an 800 or 900 credit score. They don't care. They don't trust you. They want to make their money back into the front of the loan for taking the risk of lending you $200,000, okay? Now, if we were to continue graphing it, something happens right over here. The year 2040, 17 years into the loan. That is where the principal finally overtakes the interest after 17 years of payments. So from this point forward, every time that you hand a teller $1,200 on the remaining 13 years of your contract, and they process that payment, no longer is the bank making as much on interest. And towards the end of the life of the loan, they're making peanuts, and the majority of the payments is now going to pay off your beautiful property. And here's the reason why. Your banker has already taken advantage of you. You have been a profitable cash cow for your banker. They have made thousands and thousands of dollars off of you individually. But if you combine us all collectively as a unit, they're making hundreds of trillions of dollars off of all of us combined. Just know it, okay? Now, everyone, let's take another poll. And this is for my 7 homeowners ever only. And I want to remind my 7 homeowners ever only that you represent everyone on tonight's webinar. You also represent your friends, your family, your neighbors, your society, your environment, and 95% of the population as W-2 employees, okay? For my 7 homeowners ever only, please raise your hand if you have ever gotten to the end of the life of your loan on your mortgage. You have paid your property in full, going once, going twice, going 3 times. So we got 1 individual that raised their hand. Beautiful. Okay, so we got, did you raise your hand? No. Okay, beautiful. I'm just double checking. So 1 individual. Okay, beautiful. Now, here's my next question for my 7 homeowners ever only. Please raise your hand if you have ever sold a property that you have owned, going once, going twice, going 3 times, okay? So we got 1 who has sold. Beautiful. So we got 1 who has sold. Okay. For my 7 homeowners ever only, here's my next question. Please raise your hand if you have ever refinanced a property that you have owned, going once, going twice, going 3 times. So we got 1 individual. Beautiful. So we got 1 who has refi. Okay. Now, everyone, where do you see the majority of the homeowners on what they're doing? It's right over here. Now, and I've been doing this meeting for the last 13 years. And when I was doing it live in a room, okay, prior to COVID, okay, on average, I would have 25 people in the room. And when I would ask all the homeowners, please raise your hand if you ever paid off your property in full, 3 or less would raise their hand, okay? But when I would ask if you ever sold or refinanced, the hands would go up like crazy. This is referred to as the 48-month index, which is equivalent to 4 years, okay? And based on statistics, the 48-month index, we acquired our property as of July 2023. Based on statistics, your average homeowner starts to sell or refinance their properties after 4 years of owning them, okay? So everyone, let's take a closer look at the 48-month index, okay? So as of July 2023, we start making payments of $1,200 on our property. After 48 months of payments, that's equivalent to $57,600. So from July 2023, fast forward to July 2027, we have handed the teller a total of $57,600, okay? And we determined that $250 from that $1,200 payment is going towards the principal paydown. After 48 months of payments, that's equivalent to $12,000, okay? So everyone, let's take a closer look at that number. So from the year 2023 to fast forward to 2023 or 2027, that means we no longer owe $200,000 on our property. Okay, we have reduced that total amount by $12,000. Now we have a balance of $188,000, and it took us 4 years of payments to make this happen right here. Okay, now everyone, let's look at what's remaining, the interest. We determined that $950 is going into the banker's pockets as interest for doing us the favor of lending us $200,000. After 48 months of payments, that's equivalent to $45,600. All we had to do is subtract, okay? So let's take a closer look at that number, everyone. So you all walk into my bank, Williams Savings and Loan, as of July 2023, and I lend you each $12,000. Fast forward 4 years, you all walk right back into my bank and you repay me my $12,000 that I lent you 4 years earlier, okay? Now I look at each and every one of you directly and I say these exact words to you. The cost of you doing business with me, for me only lending you $12,000, you now owe me $45,600 in interest on only $12,000 that I lend you. Now, here's my next question for all of my guys. Does that look like 6% interest to you? Yes or no in the chat box or in person? Nice and loud. No, right? No, beautiful. It does not look like 6% interest, all right? Now, we have a formula. It's not accurate, but here goes, okay? It's guesstimating the amount of interest. Everyone, pay close attention. We take that 6%, times it by 2, equals 12, add a 0 at the end, 120%. This $45,600 in interest on only $12,000 principal pay down, does that look closer to 6% or 120%? You know the answer, 120%. And if there are any naysayers as guests on tonight's webinar who does not believe me, okay, for my 7 homeowners ever owned, okay, I'm a homeowner, but I keep myself out of the polling, okay? In order to acquire our properties, they gave us a closing date. And on this closing date, we had to drive down to a title agency and we had to conduct the closing, okay? That means we had to sign a lot of documents, okay? Now, after 2-3 hours of signing documents, okay, once we're signing all those documents towards the end, we don't care what we sign. All we want to do is receive the keys to our beautiful property and let us go home already because we're tired of signing documents and we already know how much money we're going to pay on a monthly basis, $1,200, okay? And towards the end of the signing, they reach into the HUD docket, okay? And they bring out this one sheet of paper, formerly known as the Truth and Lending Statement. And it breaks down 30 years of payments precisely. And here's what it states for this house that you're acquiring today. Okay, for this house that you're acquiring, only worth $200,000. After 30 years of payments, you will be paying back to us, the bank, over $431,000 total. Over $231,000 is going into our pockets as interest for doing you the favor of only lending you $200,000. Now, please raise your hand if you are now upset on how you just found out the banks are taking advantage of all of us. Beautiful, right? So my job is to bring awareness to you and hopefully get you so upset that you decide to take matters in your own hands, okay? So let me get you a little bit more upset, okay? Now, what do we determine that most homeowners do, okay, after 4 years from owning their property? Oh, they start to refi or sell their properties right over here. So everyone, let's start looking at the 48-month index at a closer point of view. Okay, now, okay, you all heard of Quicken Loans, Guaranteed Rate, Rocket Mortgage, Lincoln Financial. What are these companies? Oh, they're examples of lenders. Okay, now, okay, how do these lenders get us to refinance our properties after 4 years of owning them? They market to us strategically. They market via internet, radio, television, or directly in our mailbox at our homes, okay? So after 4 years of owning your property, you walk into my bank, okay? Take that back, I got ahead of myself, okay? So, William Savings and Loan, okay? Yeah, I'm correct. After 4 years of owning your property, okay, you walk into my bank, William Savings and Loan, and you walk in with my flyer. Hey, Will, I received your flyer and I'm interested in refinancing my property. Can you help me out? The next thing I'll state to you is let me get your social security number. I'll take a look at your credit report and I'll let you know if I can help you out or not. Sounds fair? Beautiful. Congratulations. After viewing your report, I can help you out. Here's what I can do for you if you decide to refinance with me. So, you currently have a balance of $12,000 on your Visa right here. How would you like for me to pay that total amount for you if you refinance with me today? Now, you start getting enticed and a little bit excited. The next thing I'll say, not only am I going to refinance your property, but I'm going to lower your monthly payment of $1,200 by a whopping $50. Your new payment's $1,150. Now you're jumping in the air for joy and you say, yes, let's do it. Congratulations, you just refinanced your property. Okay, everyone. What did I actually get you to do? Okay, after 4 years of payments, you already had given the bank $45,600 in interest on only $12,000 principal pay down. And guess what I got you to do? Start the contract right back from the beginning, ground zero. And this is the vicious cycle that we allow the banks to put us in, because we believe that they're doing us a favor. But in actuality, what they're doing is themselves a favor. Well, everyone, how are the banks doing themselves a favor? Okay, let's take a closer look at that. You all heard of Quicken Loans, Guaranteed Rate, Rocket Mortgage, Lincoln Financial, okay? Back in 2018, Scott and I, we were traveling on a weekly basis for 6 months to the Philadelphia area, helping out that office. And we would pass Lincoln Financial Field, home of the Super Bowl champs, Philadelphia Eagles. LeBron James used to play for the Cleveland Cavaliers. They play at Quicken Loans Arena. The Chicago White Sox, they play at Guaranteed Rate Field. But wait a minute, aren't these the names of these lenders on these magnificent stadiums? Yes. But wait a minute, doesn't it cost hundreds of millions of dollars annually to sponsor a professional venue? Absolutely. So where the hey do they get all this money to afford to sponsor professional venues? It's your money that you're bleeding. You see those 40 hours a week that you're exchanging at your job, and on payday, you hand your check to a complete stranger to take care of it for you. They're taking good care of it for them, not you. Now you know why the person that invited you on tonight's webinar invited you on tonight's webinar. You gotta stop the bleeding. Well, how are you gonna stop the bleeding? Well, let's get you signed up as a student. You sign up as a student, you start collaborating with like-minded individuals. Close to 25,000 individuals under Scott's and Nancy's organization collaborating on a weekly basis. And their organization is one of many within our company. Acquiring knowledge, learning systems to understand finances, and not only finances, but real estate investing. Now, you sign up as a student, you start taking online courses. One of those many powerful online courses is Velocity Banking. And here's where I'm going to give you a good taste of Velocity Banking. But before I do so, we're going to rehash one thing. You all now know that as a W-2 employee, the most important currency for these individuals is currency number one, money. But they really don't understand how money works. The only thing they know about money is making it, trading an hour for $1 to go get it. And once they receive it, they hand it to a stranger to take care of it for them. Now, for business owners or the wealthy, The currency of choice is number 3, knowledge, specialized knowledge. And that's what real estate investing is. Nothing more, nothing less. And money for business owners, all it is a tool, okay? We don't trade our time and chase after it. Oh, no, no, no. We know how to utilize it. And in here, we're going to utilize it as velocity, the speed of banking, using the bank's own products so that we can get out of this scenario that currently has us drowning in debt. Well, how's that possible to use the bank's products to get out of this scenario ASAP? Well, here's where I'm going to take you step by step along the way, okay? And after every step, I'm going to ask everybody at home to please confirm in the chat box with a yes, and the people in here, okay, with a yes, you understood, or redo, R-E-D-O, if you did not, okay? Don't get ahead of yourselves and your minds. Let's take it step by step. If somebody were to ring your doorbell at home, do not answer, because you're going to be lost. If you got to use the bathroom, take me with you, because you're going to be lost, okay? Now, how are we going to use the bank's products? Well, direct deposit is one of the bank's products, okay? So everyone, we're each making $5,000 on a monthly basis, okay? And using direct deposit, electronic banking, the money lands electronically on payday into the savings and checking account. What's the next thing that we establish what we do? We pay our bills out of these 2 accounts. We pay for the house, the car, the line of expense, the living expenses, and the long and short-term savings. From this point forward, we are no longer going to pay our bills out of the checking and savings account in this example. Once that money lands into the checking and savings account, we are then going to transfer it over to this account, which happens to be the Visa line of credit. Everyone, please confirm with a yes, you understood, or redo if you did not. Okay, don't get ahead of yourselves, right? Let's take it step by step. Beautiful. Everybody's with me. Okay, beautiful. I didn't get a redo. Let's continue. Now, why would I do such a thing? Here's the reason why. Mysterious things start to happen in your favor when you start taking control of your financial situation at home instead of giving control to a complete stranger. What do I mean by that? So if we would have left the money in the checking and the savings account, okay, how much we had budgeted to send to the Visa? $600. But we're not leaving the money in the checking and savings account, and we're not sending them $600. We are now sending them $5,000. Is $5,000 greater than the $600? Yes. Does it cover the minimum payment as well? Yes, simultaneously. And because it does, everyone, guess what? We don't have to worry about that $600 minimum payment any longer. And if we don't have to worry about that $600 minimum payment, everyone, we don't have to budget for it any longer. A business plan, we can deduct that $600 from our monthly expenses, our output. $5,000. Everybody, okay, great. I just had if the internet is unstable, there's a lot of people in the room. I just don't want to lose nobody. So 5,000 minus 600, that equates to 4,400. And remember, everyone, this is a business plan, a business model. That $600 that we just freed up, we can now add it under the category of cash flow for a total amount of $600. Once again, please confirm, yes, you understood. Redo if you did not. Okay, beautiful. Step by step, everyone. Beautiful. No redo. Let's continue. Okay, now. Okay, let's move on. Now, our parents taught us to save our money in case of a rainy day or an emergency. Okay, how is this nest egg that we all been enrolled in working out for all of us? Well, we took a poll earlier and we determined that Americans are horrible savers. So why are we doing a plan that doesn't work? Isn't that called insanity? Doing the same thing over and over again and expecting different results? Well, we're not insane. We're very intelligent individuals. So if this plan ain't working, let's stop doing this plan. From this point forward, we are no longer going to save our money for a rainy day. If we don't have to save our money for a rainy day, we don't have to budget for that $1,400 any longer. And if we don't have to budget for that $1,400, we can deduct it from our monthly output. 4,400 minus 1,400, that equates to $3,000. And that $1,400 that we're saving, or no, that we're no longer budgeting, we can add it to cash flow for a total amount of $2,000. Once again, everyone, please confirm, yes, you understood. Redo if you did not. I just want to make sure I don't lose anybody. Question? Oh no, redo. Oh, yeah, beautiful. I'm sorry. So Jada, here's a redo for you. So Jada, okay, we're no longer going to save our money for a rainy day. So we've been saving $1,400 every month. And the reason why we're not saving, because we took a poll earlier and we determined Americans are horrible savers, right? So that plan does not work. That's insanity, doing a plan that does not work. So we're no longer going to do it. If we don't have to save our money no more, we can deduct it from our monthly output. 4,400 minus 1,400 equates to 3,000. And this is a business plan. That $1,400, we can add it right here to cash flow for a total amount of 2,000. Jada, please confirm you understood. Beautiful. You're very welcome. Thank you for asking. I love that. Okay, beautiful. Okay, now let's continue. So from this point forward, everyone, we are now each making $5,000 right here. Okay. And our monthly cash flow is 2,000. And our monthly expenses is 3,000. We still got to pay for the house, the car, and the living expenses. But how are we going to pay for the house, the car, and the living expenses if we just send our whole payroll to the Visa line of credit? Well, remember, everyone, earlier I asked you all, every time that I make a payment of $1,200 on the mortgage or $600 on the vehicle, and that payment is processed, can I then use a penny of that payment once it's processed to buy me a shirt and tie? You all said no. So we determined that the loans are one-dimensional. They only work in one direction in favor of your banker. But you said yes, that every time the Visa receives a payment of $600, we can reuse the Visa to buy me the shirt and tie. And we determined that the Visa is two-dimensional. It works in favor of your bank, but we can also make it to work in favor of us. So if I'm sending a larger amount of $5,000 to the Visa, can I reuse $3,000 once that $5,000 is processed to pay for the remaining expenses right out of the Visa account? Absolutely. So that's what I'm going to do. Now, we graph the loans so that you can see what occurs. Let's graph the lines now so that you can witness what happens. Okay, so everyone, we're going to graph the Visa. We have $15,000 is our limit and $12,000 is the balance due. Okay, so everyone pay close attention. So here's $12,000 balance due, and the limit is $15,000 right here. We're going to graph this right now. So everyone pay close attention, okay? As of July 2023, we're each making $5,000. Once the money lands into the checking and savings account, we are then going to transfer it over to the Visa line of credit. So we're starting with a balance of $12,000. The Visa is going to receive a payment of $5,000. Oh, let me change the color of my ink. $5,000, right? So $12,000 balance due. And they're going to receive a payment of $5,000. The new balance is $7,000. But we're going to reuse $3,000 right out of the Visa to pay for the remaining bills, the house, the car, and the living expenses. $7,000 balance due. We're reusing $3,000. The new balance at the end of the month equates to $10,000. Once again, please confirm, everyone. Yes, you understood. Redo if you did not. Beautiful. So no redo. I'm going to continue. Everybody's with me. Okay, I love it. Okay, now in August, we're going to do the same thing. Okay, we're each making $5,000. The money lands into the checking and savings account, and we're going to transfer it to the Visa. We're starting off with a balance of $10,000. They're going to receive a payment of $5,000. 10,000 balance due minus a $5,000 payment. The new balance is 5,000. And we're going to reuse 3,000 to pay for the remaining bills, the house, the car, and the living expenses. At the end of the month, the new balance is 8,000. Everybody's good with that. Okay, September, let's do it again. 5 in, 3 out, 6,000. October, 5 in, 3 out, 4,000. November, 5 in, 3 out, 2,000. December, 5 in, 3 out, 0,000. Okay, what just happened, everyone? Simply by acquiring knowledge from one of our many powerful courses, we paid off $12,000 in 6 months. Now, if we would have left the money in the checking and savings account and only budget for the minimum payment of $600 to send to the Visa, how long would it take us to pay off $12,000, only sending the minimum payment of $600 due, and the bank is charging us 21% interest right on top of that? A lifetime? But it did not take us a lifetime. It took us 6 months. Now, everyone, what happens when you pay off $12,000 in 6 months to the Visa? It's called cause and effect, okay? Something increases. What increases? How about this? Your credit limit, okay? So from $15,000, you're now going to receive a $10,000 increase, and your new limit is $25,000. Please raise your hand if you have ever received a credit limit increase. Beautiful. So you know I'm not lying. Thank you. Okay. Now, what else happens when you pay off $12,000 in 6 months? How about this, everyone? Credit score. Your score goes from 650 to 700. Please raise your hand if you have ever received a credit score increase. You know I'm not lying. Thank you very much, everyone. Okay. Now, everyone, what else increases when you pay off $12,000 in 6 months? How about this, everyone? Multiple offers from competitors for their lines of credit. Please raise your hand if you have ever received multiple offers from competitors for their lines of credit. Beautiful. So you know I'm not lying. And for everyone that raised their hand in the room or in the chat box at home, okay, please let us know, what did you do with the offers that you received in your mailbox? Please give me your responses. What did you guys do? You tore them up and you threw them away. What did you do with them?
Sometimes I use the 0%.
He's a student. He's a student. Yeah, he cheated. So Allison did nothing with them. Okay. Guido, right? I said it correct, right? Okay. Tore them up, did nothing. Jada as well. And I got somebody else here. I want to see who it is. Let me go up this thing. And Cody, ripped them up. Okay. Beautiful. I'm dealing with very intelligent individuals. I love it. But wait a minute. All of you are telling me that you received offers and you tore them away, tore them up, threw them away, ignored them, did nothing with them. Okay. Why would you do such a thing? Here's the reason why, everyone. Because you're all W-2 employees. You don't understand finances. And who taught you to throw them away in the garbage? The same two individuals that trained you on saving your money for a rainy day, mom and dad. And what did they say about credit cards? Oh, they put the fear in us. Stay away from them. Credit cards are evil. And then they said this: if you must open up a credit card, just open up one, but never use it. Only use it in case of an emergency. There's that word again. You see that your parents didn't know how to train you because they learned the exact way as you did from their parents, which happened to be your grandparents. And who taught your grandparents? Your great-grandparents. And who taught your great-grandparents? It was not your great-great-grandparents. It was the banking industry in the early 1900s. And generations since then of W-2 employees are still banking today the same exact way that their great-grandparents banked in the early 1900s. Just notice, everyone. Now, everyone, pay close attention. In order to pay off $12,000 in 6 months, then I tell this individual that represents all of you to go get a second job. Absolutely not. Then I tell them to send double payments to the bank. Absolutely not. With the same income Simply by acquiring knowledge from one of our many powerful courses, we paid off $12,000 in 6 months. Okay, just notice. Now, everyone, pay close attention. Okay, now fast forward to December 2023. We have a zero balance. Can I still bank with the Visa if I have a zero balance? Technically, I can. But if I do, I'm going to receive a phone call from the Visa company, and they're going to say these exact words to me. Hey, Will, you're sending our company $5,000 on a monthly basis, but you don't owe us a penny. Why are you sending us money that you don't owe us? So in order to bank with the Visa, once again, what must I do? I got to use the Visa. I got to put a balance on the credit card. You see, we've been taught as W-2 employees, okay, that debt is horrible, debt is bad, stay away from it. It's fearful, right? But for business owners or the wealthy, debt is awesome, debt is great, debt is powerful, especially OPM, other people's money. Is the Visa their money or my money? That's their money. So I'm going to use their money so that I can create a balance on the Visa so I can utilize the velocity banking strategy once again. Okay? So everyone, pay close attention. This is what we refer to as chunking when it comes to velocity banking. We have $25,000 available on the line. And I want to stay below the 50% usage, okay? Because credit card companies, right? The second that you go higher than 50% usage, it's called the credit utilization rate, they know you're starting to get into financial situations, okay? Once you go above that 50% usage, they know you're starting to be in financial woes, okay? Now, everyone, look at this, right? On the Visa, we have $15,000 available, but we've used up $12,000. Ain't that higher than $7,500, 50% usage? Absolutely. So is this person, okay, that represents all of you, are they using their credit card for emergency purposes or living outside their means? You know the answer, they're living outside the means. And this equates to trillions of dollars since the previous crash of 2008. And based on statistics, we did not learn our lessons. These individuals will die in debt. They may file bankruptcy down the road, but because they don't understand finances, based on the stats, they'll put themselves right back in the same situation that had them file bankruptcy before, okay? Now, everyone, so fast forward to December 2023, okay? We have a zero balance, okay? So I'm gonna create a balance on the Visa so that I can use the velocity banking strategy, okay? So we got $25,000 available. So I want to stay below the 50% usage, and I'm going to just take $12,000 from the Visa, and I'm going to go see my teller where I pay my mortgage. Hi, teller, how are you? Hey, Will, how are you? How may I help you today? Well, here's $12,000. Can you process that payment towards my home? Absolutely, Will. So she processed the payment. Thank you, Will. Have yourself a wonderful day. You as well, okay? So everyone, where does that money go to when you pay money in advance on your mortgage? Principal only. So by taking $12,000 from the Visa and handing it to the teller where I pay my mortgage, I reduced the principal balance of $200,000 on my home to $188,000. And I did that in one payment, okay? Now, if that money only goes to principal only, what is it that you don't have to give the mortgage company on that $12,000 that they just received from you? Interest. Congratulations. I just saved you $45,600 in interest that you never have to give the mortgage company on that $12,000 that we just handed to them. Did I create a brand new balance on my Visa? Absolutely. And I did that as of January 2024. Can I now, once again, utilize the velocity banking strategy now that I have a $12,000 balance on my Visa? Yes. So that's what I'm going to do. Repeat the strategy. Here goes, everyone. January, February, March, April, May, June 2024. So we're each making $5,000 on a monthly basis. The money lands into the checking and savings account, and now we're going to transfer it once again to the Visa line of credit. we're starting off in January with a $12,000 balance. The Visa is going to receive $5,000. We're going to reuse $3,000. The new balance at the end of January is $10,000. February, same thing. 5 in, 3 out, 8,000. 5 in, out, 6, 4, 2, 0. Fast forward to June 2024. What just happened, everyone? We just paid off an additional $12,000 to the Visa. Okay, everyone? What happens when you pay off an additional $12,000 on your Visa? Oh, cause and effect once again. Your limit goes even higher. From 25,000, they're going to double that to 50,000. Why would they do such a thing? Because now they know that you understand finances. No longer are they looking at you like a liability. They're now looking at you like an asset. And they want to partner up with you. Your credit score goes even higher, and multiple offers are coming in left and right in your mailbox. Are we still shredding the offers? Oh, no, 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 no. Just by utilizing one offer, okay? You don't even have to use it. Just by opening up, right? Activating, that's the word I'm looking for. You create one thing for yourself, leverage. And with leverage, what can you create to go down? How about this? Interest rates. Okay, can I call up the bank and say these exact words to them? Hey, Mr. Visa, you've been charging me 21% interest on my credit card. If you don't make that disappear today, I will fire you by tomorrow. Would they obey? Absolutely. Because all your offers, just like Darren said, are coming in at 0% for a certain amount of period. Why do I want to continue to pay interest? And folks, I have done this 4 times over. That's the power of knowledge. Now, everyone, pay close attention to what I'm about to say now. Back in January of 2024, we took out $12,000 from the Visa and handed it to the teller where we pay our mortgage. And we reduced the principal balance from $200,000 to $188,000. And we did it in one payment. Fast forward to June 2024, 6 months later, we paid off $12,000 principal pay down in 6 months instead of the conventional way of 4 years. Please raise your hand if you like that trade. $12,000 principal pay down in 6 months instead of 4 years. Love the hands going up. Okay, now, everyone, if we would not have done that after 4 years of payments, the traditional way, the bank where we pay our mortgage would have capitalized on $45,000. Let me change the color of mine. $45,600 in interest on only $12,000 principal pay down at 6% interest, or should I say Celsius? But they're not capitalizing on $45,600 in interest at 6% interest or Celsius. But the Visa company is capitalizing on that $12,000 at 21% interest, or should I say Fahrenheit. So how much is the Visa capitalizing on that $12,000 charging us 21% interest? Well, folks, here's where you got to do the math so that you know I'm not lying. Everyone, bring out your calculators from your cell phones, from your kitchen countertops, or from your dens in your offices. You do the math so that you know I'm not lying. Who can tell me what the answer is? $12,000 times 0.21. And as soon as you get your answers, yell it out or put it up in the chat box.
25.
Beautiful. So it's $2,520. And Darren is correct, but Darren is also incorrect. Everyone, what makes Darren incorrect? Well, behind that 21% interest, we see an APR right there, annual percentage rate. It did not take us, Ingrid, 12 months. It took us 6 months. So Darren, divide that by 2. Even more money saved in our pocket. Folks, that's a total interest of $1,260. That's a total savings of over $44,000. Otherwise, you will be putting that money into the banker's pockets as interest. Please raise your hand if you like that trade. Beautiful. Love the hands going up. Now, everyone, pay close attention to what I'm about to say now, okay? Fast forward to June 2024. we have a zero balance. So what must I do once again? Use the Visa. So we have $50,000 available right here. Can I take $25,000 and go see my teller and chunk that into my mortgage? Absolutely. And we have thousands of students nationwide doing higher limits on multiple properties simultaneously to pay off their properties very fast, okay, very quickly. But I got a point to make. You see the owner and founder and company CEO, Mr. Bob Snyder from Renaissance, okay? He was tired of the gurus capitalizing on impulsive individuals, okay? And what I'm about to say next is going to shock you. But the proof is our students in the thousands nationwide, okay? For your average cost of a single family home of $200,000, right here. If we just take $12,000 from the Visa, chunk that into the mortgage every 6 months, we will pay off a 30-year mortgage, not in 30 years, but in 5 years. Please raise your hand if you would like to pay off a 30-year mortgage in 5 years and save yourself 25 years of interest. Otherwise, you will be putting that money into the banker's pockets as interest. Beautiful. Now, everyone, I love the hands going up, by the way, okay? 5 years later, oh, bear with me. Let me get my mouse. I'm still here, everyone. There we go. Let me enlarge this. No, I gotta minimize this and enlarge this one. Beautiful. There you go. Thank you. Okay, so everyone, pay close attention to what I'm about to say now, right? 5 years later, the year is now July. Oh, come on. The computer's being sensitive now, right? So July 2028. That's 5 years from now. That means we no longer have a house payment. Wow, come on, computer. It's being very delicate right now. And that's the Wi-Fi. There's a lot of people in the building today. Right? So we no longer, wow, I'm not even touching it. $1,200. We don't have to budget for that $1,200. We can deduct it from our monthly output. 3,000 minus 1,200, that equates to 1,800. And our monthly cash flow, we can add that $1,200 to cash flow for a total amount of $3,200, okay? Now, what's next on the list? We got the car and we got the living expenses. But if this is 5 years later, we bought the car 5 years prior. That means the car payment is also taken care of, okay? But based on statistics, your average W-2 employee upgrades on a brand new vehicle every 5 years. Why do we do such a thing when we got a perfectly great car in our driveway? It's called keeping up with the Joneses, right? Darren gets a brand new motorcycle. His neighbor Bobby wants a motorcycle as well, right? Allison gets a brand new Cadillac. Her neighbor Ingrid wants her Cadillac as well, okay? So what do we go do? We put ourselves into more debt. Another $25,000, 5 more years of payment, $600 every month, and the bank is capitalizing on charging us 6% interest, or should I say Celsius. But can we do with the car note exactly what we did? Excuse me, everyone. Can we do, excuse me, can we do with the car note exactly what we do with the house note? Utilize the velocity banking strategy? Absolutely. So let's do that. Let's take 12.5 from the Visa, chunk that into the vehicle every 6 months. And guess what? After 1 year, your car is now paid off. That's a savings of 4 years in your pockets. Otherwise, you will be putting that money into the banker's pockets. So fast forward 1 more year, right? No more car note. We can deduct that from our monthly output, 1,800 minus 600, that equates to $1,200. And the $600 that we just freed up, we can add it to additional cash flow for a total amount of $3,800, okay? Now, what's next on the list? We have the living expenses, and that does not disappear, folks. You still got to eat, pay for your cell phone, the cable, take care of the kids, utilities. But and we have a better situation today because we're each making $5,000 on a monthly basis. Okay, our monthly output is $1,200, and our monthly cash flow is $3,800. So everyone, what do we do now? Well, we've been coming down to Real Estate Church week in and week out, learning how to invest in property. Let's now start to apply the knowledge that we have acquired. Okay, so everyone, let's go get our second property right over here. Let me change the color of mine. Our second property right here. Now, this property is going to be worth $200,000, okay? But as an investor, are we going to pay retail price for our properties? Oh, no, 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 no. We solve other people's problems. So we know how to acquire property way below market value at a wholesale price of $140,000. That means we have an instant equity of $60,000 right here. But I want to go down to the bank and I want to go get my whole $200,000 because I want to do a fix and flip on this property and I can sell it or rent it at an even higher profit margin. So now I got to go back to the bank who lend me my money on my first property and get more money from the banker for my second property. So I walk into the bank. Hey, Mr. Banker, how are you? Hey, Will, how are you? How may I help you today? Well, you helped me out with my first property. I'm interested in acquiring my second property. Can you help me out? Well, after viewing your credit report, absolutely, Will. And here's what he proposes. Will, we can lend you another $200,000, okay? Let me change the color of mine, okay? I like this darker. We can lend you another $200,000 right here, okay? Now, this is going to be a 30-year fixed mortgage, and instead of charging you 6% like we did on your first loan, we're going to cut that rate in half and only charge you 3%. Well, remember the formula, everyone. 3 times 2 is equal to 6. Add a 0. Do I want to pay 60% interest on this loan, or should I say Celsius? Absolutely not. So I got to tell Mr. Banker, hey, Mr. Banker, thank you, but no thank you. I'm not interested in this product, Mr. Banker, but maybe, Mr. Banker, you can help me out with a different product. Now, Mr. Banker is scratching the top of his noggin, right? Wondering, like most guys, what product are you referring to? Here's the product, everyone. It's called an HELOC, a HELOC, Home Equity Line of Credit. And what's the key word, everyone? Line of credit. Is it simple interest, Fahrenheit, or is it amortized Celsius? Well, you know the difference, right? And folks, we have students in the thousands nationwide acquiring HELOCs to finance their properties anywhere between 3 to 9% interest, or should I say Fahrenheit? Is that less than the 21% interest that originally the Visa was charging us on our credit card? Oh, yeah. Okay. And what I'm about to say next is going to shock you. But the proof is our students nationwide. Okay. Because we have the know-how on how from the banker to pay it off. Okay. To finance it, take that back. Utilizing the velocity banking strategy, it will not take us an additional 5 years to pay off. Please forgive me, everyone, on the screen because it's just very delicate right now. That's Wi-Fi. It will not take us another 5 years to pay off the second property. We can get it done in 1.5 years. Please raise your hand if you would like to acquire a property today and have it paid in full in 18 months. Love the hands going up. So everyone, fast forward 18 months, we just paid off our second property. Well, let's go get our third property, okay? So after 3 years, you got 2 more properties paid in full, okay? Let's add 3 years to the mix, okay? You have a total of 4 properties in 6 years, okay? Let's add 3 more years to the mix. A total of 6 properties in 9 years, plus the original property that we started off with, for a grand total of 7 properties. Is this a better nest egg than trying to save your money for a rainy day like we all been enrolled in? What would you be able to do? How would you be able to live if you were controlling a portfolio with 7 paid properties in it? Just notice, okay? Now, everyone, pay close attention to what I'm about to say now, okay? I'm acquiring all these properties because I have the know-how way below market value and the right product to receive from the banker, okay? I'm paying them off in 18 months using the velocity banking strategy. But at my job, I only make $5,000 on a monthly basis. So where am I gaining the additional funds needed to pay off these properties in 18 months? Somebody please give me that response. I'll give you a clue, everyone. Who is living in the properties that I'm acquiring? Somebody please give me that response. The tenants, the renters. Thank you, Darren. The tenants or the renters. So everyone, pay close attention to what I'm about to say now. We started off on tonight's webinar, if you look on the upper right-hand corner of the screen, with 13 individuals, okay? And from 13 individuals, we determined that we have 7 homeowners currently. So 13 minus 7, that equates to 6. That means we have 6 individuals who are listening to me on tonight's webinar who are renters listening to me on tonight's webinar, okay? So whether you rent or whether you own, guess what you do? You pay off an investment property. It's the most expensive expense on your monthly budget, the roof over your head. And because you do so, guess what? You're considered a real estate investor, whether you like it or not, okay? So everyone, look up on the left-hand corner, the upper left-hand corner. From the 4 currencies, number 1, money. Number 1, money. Oh, don't tell me. Don't tell me you're freezing. Yeah, oh boy. Hey, bear with me, everyone. Oh, don't tell me you're freezing. Oh, no, 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 no. You got it. Everyone, bear with me. I'm just saying. Yeah, but okay, so everyone, we got this. We're towards the end, right? So from the 4 currencies, pay close attention. From number 1, money, 2, time, 3, knowledge, or 4, relationships, which one of these 4 make us equivalent to the wealthy? Is it 1, money, 2, time, 3, knowledge, or 4, relationships? Somebody please take a stab at it in the chat, in the chat box or in person. What makes us all equal?
No.
Wrong answer.
All of us equal?
Jada says money, number 1, wrong answer.
Number 4?
Number 4, relationship, wrong answer. What is it's time, right? Time is the correct answer. Ding, 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 ding. Now, everyone, why does time make us all equivalent to the wealthy? Here's the reason why. No matter if you're lower class, middle class, or upper class, nobody is better than nobody on God's earth, because at birth, he granted us all the same amount of time. So if we're all equal when it comes to time, why is it we have business owners with properties all over the United States, all over the world, and us as W-2 employees struggle in our lifetime just to acquire 1 measly property? Somebody please give me that answer, all right? Is it
lack of knowledge?
Lack of knowledge. It's knowledge. They're knowledgeable, okay, when it comes to finances, and you're completely ignorant when it comes to finances. Now, if we're all equal when it comes to time, nobody is better than nobody, okay? Why is it that we have millionaires and billionaires like the Donald Trumps of the world that can make billions of dollars, lose billions of dollars, file bankruptcy a total of 4 times, remake that money, and we as W-2 employees struggle in our lifetime just to make $5,000 on a monthly basis? What's the answer now? You know the answer. They are knowledgeable and you're completely ignorant. Please raise your hand if you want knowledge now. Please raise your hand if you want knowledge now. Beautiful. Okay? So everyone, love the hands going up. And for the guys who are refusing knowledge, are refusing to raise their hand, know one thing after listening to me on tonight's webinar. On the loan side, okay? On the loan side, I cannot write on the screen, so bear with me, but we're at the end here, okay? On the loan side, okay? For people as W-2 employees, okay, who are ignorant about finances, all you are is an L. You're a liability. You're a liability to 3 entities who are teamed up against you. You're a liability to the banks. They take as much as your money on interest as they want. You're a liability to the government, state, local, and federal. They're the first ones to dip into that check on payday, and they take as much as they want. And you're a liability to your employer. Those 40 hours a week that you're exchanging for the next 40 years, you're part of your employer's wealth plan. They're not part of yours. The more money you make, the less you make, because the more they take. And it doesn't matter how much money you make. Scott Rowe, as a former W-2 employee, was earning $212,000 annually. He was broke at a higher income. That's it, right? Your average lotto winner, based on statistics, goes broke after 5 years from winning their lottery. Just notice. When you choose knowledge, right? Okay? When you choose knowledge, you become an asset, the captain of your ship. The more money you make, the more money you make because the less they take. Okay? Folks, give yourselves a big round of applause for putting up with me this evening, Will Montes. And here's the last thing I'm going to say for all of the guests on tonight's webinar. If you do not have a minimum of $2,500 to get started with our least expensive package, our essentials courses, okay? Just notice you're a W-2 employee and you probably got a job, a job. You're just over broke. Do not let what you lack get in the way of preventing you of starting with us. We have financing available and everybody is pre-qualified whether you have a job or not. Renatus has funded over $100 million nationwide for students to get started with their curriculum. So you have no excuses. Call up the person that invited you on tonight's webinar this evening and tell them that you want to start immediately. Folks, thank you for taking out your precious time on being on tonight's webinar. God bless you all. God bless your family. Stay safe. God bless America. And hopefully we'll see you down the road as a member within our community. Signing off, everyone have a wonderful night and a great weekend. Thank you. And you're all very welcome. Jada, Bobby, and everyone else.
Well, was that not informative or what? Did you get what you needed, guys? I hope so. It's velocity banking is very detailed, right? It's a lot of information to take in. So I hope you got some really good notes. But if this information was good for you and you would like to learn more, reach out to me and we can connect. I like to invite you to a live overview for you to see it yourself, and you can ask the questions that you would like to ask, or put them down in a box and I'll get them over to Mr. Will Montes to see if he could come in and answer them for us. So with that being said, I want to say thank you very much for your time today. This week is going to be filled with presentations of informative, exclusive partnership opportunities for all members within inside the group, as we are working diligently to reach our goal and help 84 million families to become sustainable families, financially literate, and building and becoming better, building better people, building better families. God bless. Have a wonderful, blessed, amazing week. Remember that you were born a winner from the time you were conceived in your mother's womb. You were born with everything that you have, that you need inside of you. Go out here and be amazing this week, ladies and gentlemen. Never give up on your dreams. Only you can do it. Have a blessed day. Bye.